Welcome to the channel Get Rich. Today the company we are going to look into belongs to commodity derivative industry. So it's an exchange. So we are going to see where are their revenues are coming from, and we are going to analyze their business, and we are going to analyze their financial statements, and then we are going to come up with a price target for 1 year. So if you like this video, please like, share and comment, and if you are new to this channel, please subscribe, and if you also want to receive a free email newsletter from this channel, please subscribe in the link below as well. So then let's get started. So before looking into the company, let's first have a look at the commodity derivatives industry. So what are the different volumes of this particular industry? So if you look into their global contracts volume for different industry, for example agriculture, energy, non-precious metals, precious metal, so the average volume of contracts which are traded are increasing in 2019 to 20. And if you also looking across the different regions, Asia Pacific, Europe, North America, others, so yeah, everywhere from 2019 to 20 the number of contracts traded are increasing. If you look into the volume of commodity derivatives traded on Indian commodity exchanges, for example from financial 2020 to financial 2021, so agri commodities decreased by 29%, base metal decreased by 64%, bullion decreased by 1%, energy decreased by 64%. In total, it's decreased by 42%. If you look into the turnover of commodity derivatives traded on Indian Commodity Exchange, so if you see the agri commodities, so that is reduced 26%, base metal 0.2%, and then bullion, which is gold, which increased 71%, and then energy, which reduced by 52%. So as a total 0.02% turnover. So we don't have a much change in turnover because of the increasing trading of gold, but then the others are having a lot of hitting in the financial 2021. That's because of the corona crash and so on. So if you look at the Indian commodity markets in terms of value of futures traded, so it's consistently increasing from 2015 to 2021. And if you look at the market share, so because the company we are going to look into today is MCX, or multi commodity exchange. So they are having to have, the MCX is having 96% of market share in commodity derivatives. So they are the market leader, almost a monopoly. So 96% of their market share is MCX in commodity derivatives. If you look at their market share in key segments for 2021, so in precious metals and stones, the MCX market share in Indian commodity future space is 99.97%, energy 100%, base metals 100%, agri commodities 23.49%. so their market share, they're almost a monopoly. So if you look into their different for example, if you look into the proportion of different categories or MCX turnover, so precious metals and stones is 56%, energy is 22%, base metal 20%, agri commodities 1.26%. and also if you look at the M6 major commodities turnover, so almost 30% of their turnover is silver, and 26% is gold, 13.8% in natural gas, and then 8.88% is crude oil, and then copper, and then nickel, zinc, and so on. So today we are going to look at the MCX, as I just said. So if you look at some of their key parameters, so their market cap is 7,229 crores, and their stock P is 49.7, but maybe this is because their lower net profit expected in this particular year. And if you look at the return on capital employed is 15.7%, return on equity 13.2%, so that's decent. And if you look at the for example, debt to equity is 0, that's good, no debt. And if you look at the price to book value is 5.37, current ratio is 2.32, that's also good. And if you look into their price chart, for example, so as you can see, so the price is it is it's a cyclical business, I would say, based on the price chart, because it's decreasing, increasing, decreasing. So it's a kind of cyclical to me. If you also analyze the business, we will come to know, because it's a commodity derivative exchange, we have a commodity cycle, so it's a kind of cyclical stock. So the stock went up to 2100 and currently corrected to 1400. We can see the P chart. So the P chart also, it even reached 70, 80 at some point, and currently it's sitting around 50, but the P is misleading sometimes because of the net profit they do, but the average P is somewhere around 35 for this particular company. And if you look into their business segments for MCX, so MCX is the leader in commodity derivatives exchanges in India with almost 93% market share in terms of commodity futures turnover. So they even have 100% market share in precious and base metals and energy. That's phenomenal. They are a monopoly company. So yeah, who doesn't like a monopoly business? So but then we have to look into their different fundamentals. So if you look into they are present in various commodities, offers healthy diversification. And if you look into their different key revenue breakdown, so where are their revenues are coming from? So almost, for example, out of 455 crores, almost 328 crores is coming from transaction revenue. Other operating income is 168 crores, and the investment income is 98 crores. Other income is 12 crores. So almost most of their revenues are coming from transaction revenue. So if transaction or number of contracts traded goes down, their revenue goes down. So that's why, yeah, always, because the commodities, because yeah, it depends. The commodity cycles can go up, come down, and then the contracts and also can fluctuate. So we'll see in some time what are the different trading volume of different commodities. So based on that, their transaction revenue is going to change, and then their yeah, revenues is going to change. So it's a kind of cyclical business according to me. So if you look into their for example, they are maintaining their key position. So they are the market leader, as we just see. So they are the world's 7th largest commodity futures exchange in the calendar year 2020. So with more than 218 million commodity future contract traded during that year. And if you look into their average daily turnover, so they are doing about yeah, 31,595 crores in financial 2021. And if you look into their average daily turnover over the years, it increased from 22,000 to almost 31,600 in financial 2021 from financial 2016. And the volume of contracts is also somewhere between, yeah, 234 lots in million to 204 lots. And also if you look into their reach, they have 636 members, 52,777 authorized person, 38,92,000 terminals, 1,116 towns, cities across India. So yeah, this is their reach, for example. And then if you look into their volume of different commodities, different key commodities over the years, for example, so if you look at the gold, for example, so because gold and silver is the most traded commodities in their most biggest volume in their yeah, total volume. So if you look into their almost gold and silver covers about 50%. So if you look into their volume of gold and silver, for example, in financial 2018 and 19, they are having like 2 trillion INR volume, and suddenly it rises to 6 and 7 trillion. So in 2020 and 2021, why is that happening? It may be because the corona crash, there are a lot of fear in the market, and then yeah, people started trading gold and silver. Maybe that's my take. And also if you look at the silver, it's also trading around 1 to 2, and it is rising to 3, 4, and even in quarter 1, quarter 2 financial, it's even reached 9, 6, and then currently it's also decreasing. So mainly, according to me, if there is a fear in the market, then people will flock to gold, silver, and so on, and then yeah, the volumes can shoot up. And then in terms of economy doing better, and then commodities, yeah, commodities can outperform and underperform. So this is a kind of commodity cycle. If you look at the price change in quarter 1 financial 2022, aluminum increased 445%, copper 144%, lead 64%, silver 25%, nickel 28%, zinc 58%, crude oil 56%. So the price increase is astronomical. So yeah, the commodity prices are increasing like crazy. And also if you look at the copper volume, it's also increased, and then crude oil volume yeah, decreased because crude oil volume is crazy in yeah, financial year 2020, it even reached 10 trillion. And then if you look at the different market participants, as I said, so I already explained, we have 636 members, 52,777 authorized person, and so on. So there are different market participants. So the RBI permitting subsidiaries of banks to offer broking services for commodity derivatives segment of SEBI recognized stock exchanges. So 8 bank subsidiaries were registered with the exchange during financial 20 and 2022. That's good. And on the institutional front, 2 mutual funds have stated to participate in commodity derivatives, and the exchange has onboarded 2 portfolio management service providers and 1 EFE. And then if you want to look into the growth drivers for this particular company, what are the key growth drivers for this particular company? So they are charging options from quarter 3 financial 2022. So, and they have non-linear growth in volume to 8 growth. So that's good. And the recent court ruling, they allowed long-term electricity contracts to be traded on exchange. So they have electricity contracts. They court ruled that you can now trade electricity in the exchange, in the derivatives exchange. So then they are going to launch a product with this. So the electricity trading market, it's a big one. For example, in developed markets, wherever they have open market, so the electricity contracts trading it's also pretty high one. So currently it's good to see they are also going to introduce that. That's one of the key growth driver, I would say, electricity contracts. So I would say that's going to be a good growth driver for them. And they have a market leadership, that's no doubt. They have almost a monopoly, and they have a pretty good product mix. And also, if you look into their because recently SEBI allowed participation of institutional investors such as mutual funds and portfolio managers. So mutual funds can participate in exchange traded commodity derivatives, so and also hybrid scheme and multi-asset schemes, and gold ETFs can participate. So PMS can also participate in exchange traded commodity derivatives. That can increase the different number of participants in their platform. And also, if you look into their different indexes and options, they launched MCX Com Index Bullion and MCX Comdex Base Metal Index Futures. And then if you look at the spot initiatives, they initiated spot trading platforms for bullion and coal. So they are also having other initiatives like electricity derivatives, as I said, and they have also empanelment of domestic brands for MCX Good Delivery Gold Lead. So these are their key growth drivers for this particular company. And if you look at their peer comparison, so these are not apple to apple comparisons, but yeah, we are comparing with their peers. So then if you look at the P of the different peers in financial 2021, IIFL Securities, they have 14.45 paisa, they have 66p, and then GeoJet 16.8, and MCX they have 38p. And then if you look into their financial statements, so if you look at their operating revenue, which is in financial 2020 397 crores, in financial 2021 390 crores, total revenue is increased to 494 crores from it's decreased from 503 crores to 494 crores. And then if you look at the EBITDA, it's also it's increased to 283 crores to 288 crores, and then profit after tax is reduced from 236 crores to 225 crores. If you look into their quarter-over-quarter sales, so they are having for example, March 2021 97 crores, and then December 2021 90 crores, and their margin is also at some time it reached 50, 55, and then it even dropped to 35. Currently it's 40, 42. So their net profit is 34 crores in December 2021. So they are on the lower side. And if you look at the year-over-year growth, in March 2020 there are 398 crores, March 2021 391 crores, in March 2022 it's 357 crores. So their net profit was 236 crores in 2020 to 25 crores 2021, and 2022 it's expected to be 145 crores. So it's a cyclical business. It depends on the amount of volume of contracts traded. So in the long term, even so, for example, they even reached, for example, 300 crores in March 2023, but then that's because of the increased operating margin. But then if you look at the sales, even they reached 550 crores or 525 crores at some point of time, and currently they are still at 360 crores. If you look at the compounded sales growth, so they are also in 5 to 3 years they are growing 11-15%, and then profit growth 15-32%. And then if you look at the return on equity, it's 13%, 11%. If you look into their balance sheet, so their balance sheet is also increasing. They have no debt. That's good to see. And then if you look into their cash flow statement, so they have cash from operations, and then they have a free cash flow. It's also kind of cyclical. They are sometimes free cash flow and sometimes negative free cash flow. So it's a cyclical business, I would say. And if you look at the profit after tax, what are the analysts are expecting? So in the top line, financial 2023, they are expecting 445 crores, and 440 to some analysts are expecting 550 crores. I would say it's not possible, or it's more optimistic. And then if you are looking into profit after tax, it's also sitting around 240 to 280 crores. That's the expectation. If you look at the shareholding pattern, for example, mutual funds are increasing, so that's good. And then if you look at the FII, so they are slightly reducing. And then if you look at the different mutual fund holdings, so they are buying in August, buying in September, buying in October, buying in November, buying in December. So mutual funds are keep on buying. And if you look into their mutual fund holdings, that's Parag Parikh FlexiCap regular fund. So they have 1.88% of AUM. And then they have IDFC FlexiCap, Nippon India Small Cap Fund, and then ICICI Prudential, SBI Magnum, L&T Mid Cap, HDFC Tax Saver, Sundaram Small Cap, UTI, HDFC Small Cap, Franklin India, and so on. A lot of very good quality mutual funds are holding. So that's good to see. And then if you see what they did, yeah, I can see some greens. So Nippon India Small Cap, they increased 68% of their shareholding in January 2022, and yeah, ICICI Prudential increased 35% in December. So there are a lot of mutual funds are buying this particular share, so they see a lot of potential in this company because it's almost a monopoly business, and they see in the long term this will do well. And if I look into the major shareholders shareholding more than 1%, so Kotak Mahindra Bank holding 15%, Small Cap Wealth Fund 5%, and then yeah, WF Asian smaller companies 4.95%, and then Rakesh Junjulwala 4.9%, and then PPFAS they hold 4.8%, and then JP Morgan Fund 1.6%, and so on. And then if you look at the valuation, so they are trading around 35 36 if I, yeah, but with the trailing, with the current forward P, they are trading around 49.50 because it's the net income reduced to 145 crores. And then if you look at their valuation, so yeah, I have to say I have difficulties in estimating revenue growth because it's highly cyclical, so it's highly yeah, it's very difficult to estimate growth in the short term, or yeah, because it can do based on the market sentiments, it can be anything. So for me it's a little bit difficult for estimate the growth coming ahead. So yeah, I use some of the analyst expectations. Yeah, so I put 2023 440 crores in revenue, and in net income 250 crores with a growth of 72% because of the low base in the previous year. But then I would say I have difficulties in estimating a proper revenue growth. And then if I see the price target with the current valuation, which is 32, the trailing P with the 1 year price target would be 1569 rupees, is the price cumulative growth of 11%. But then if I calculate with the P of 30, which is I believe for this company it's decent, the 30 PE. So in that case, then the 1 year P would be the 1 year price target would be 1471 rupees with the price cumulative growth of 4%. So if you ask me, it's a very good business. They have a near monopoly business, so they have yeah, almost no competitors. And then it's very difficult to see business like this. So it's a very yeah, good business. And then a lot of high profile investors, a lot of mutual funds, a lot of people are buying, so they see a lot of potential value in this particular company. So if you have long term yeah, value, if you have a long term viewpoint, yeah, you can buy this company. But if you personally ask me whether I would buy this company, so personally I will not invest in this company because it is not my area of competitions, or competence, or not my circle of competence, because it's kind of cyclical. It's difficult for me to see where this company will be 1 year, 2 year, 3 year. Yeah, in the long term, yeah, I can see them yeah, in a good position than now. But yeah, still for me it's very difficult to estimate. So I used to stay away from cyclical dependent companies or cyclical companies. Sometimes if it's on the very low base, the cyclical company, sometimes yeah, I will do yeah, swing trading, or I will invest in them. But then yeah, if this is not at the bottom of the cyclical cycle. So yeah, but then a lot of mutual funds are buying, so I think they see something which I don't see. Or yeah, the business wise it's a good one. Valuation wise, it's fairly valued at the current P of current trailing P of 32. But if you see the forward P, it's 50. But then yeah, they're going to, if you see the 1 year more forward PE, then I think yeah, they can increase their revenue. But it's cyclical, so personally if you ask me, I will stay out of this stock. So it depends on what your objective or what your skills are, and what are your yeah, goals are. So if you are a existing holder, so this is a monopoly business, yeah, you can keep holding, and there are a lot of high profile investors who are holding this particular company, so that's good to see. But if you are a new investor, so you want to play, if you know how to track these companies, and if you understand the commodity cycle pretty good, then you can invest in this stock. It's a fairly valued, it's a good business. But personally I am staying out of this stock. So that's my personal opinion. You can of course have contradicting thoughts. So that's only my personal opinion. So I'm not a financial advisor. So if you like this video, please like, share and comment. And yeah, if you want to get a free email newsletter, please subscribe in the link below. So that's all for today, and thank you for watching, and have a nice day. Bye bye.